Good morning, everyone, and welcome to the Friday morning pre-market Trigger Charts rundown. Sorry, no music today. Andrew is out of the office. He's at meetings all day, so I'll be taking over. I am Kevin Hoffman. I'm the other co-founder of Trigger Charts, and we'll be going through some various different things today. Going to be another wild one, but first off, let's take a look at the disclaimers. Investing involves substantial risk. Past performance is not a guarantee of future results. Please consider this for educational purposes only, and as always, use your best judgment when investing. So, let's take a look at what we're going to look at today. Obviously, coronavirus is going to be at the top of the headlines. We'll be looking at interest rates. Obviously, we had the Fed emergency rate cut that happened on Tuesday, but we're going to take a look at what may be happening in the future with them and the March 18th meeting and what they may do there. We'll take a look at the Democratic primary race as well as economic reports and a few earnings, although I'm not sure if they really matter right now, but we'll take a look at a few companies that have reported and also warned. So first off, let's minimize that. And if you guys have not taken a look at the Johns Hopkins portal in order to monitor the coronavirus, I would highly suggest you doing so. We'll pull it up here on our side so that everybody can see here. But if we take a look here, this is the U.S. I'm hoping everybody can see this just fine. Maybe give me a quick yes, no, and if the sound is good, that would be helpful. All right, everybody says we're looking good to go. So anyway, let's take a look. This is U.S. right now. Looks like we only have a few pot marks here in the U.S., mostly up here in the northwestern region, Seattle. We've had a few deaths up in there, and we're hoping that it won't spread too far. Obviously, we're down here in Fort Lauderdale where we haven't really seen any cases at this point in time. However, there are quite a few rumors out that testing kits have not been available to many of the different states throughout America, and therefore we may see a huge spike in cases coming soon as testing kits become available to the different states. But let's take a look. If we zoom out here, let's see if I can zoom out. We can see over in Europe, obviously a lot more cases. We just finally reached over 100,000 up here in the total confirmed number of cases. Mainland China has started to slow down a little bit. South Korea slowed down a little bit, but obviously Iran, Italy have continued to escalate. And obviously, as I spoke earlier, U.S. may be seeing some trouble in the near future. If we take a look over in China, this is obviously how China looks. But in the bottom right-hand corner here, you can kind of see the various different cases that have showed up, and you can see China's in the orange here, and they've kind of leveled out after spiking pretty hard. And here's the total number recovered, and then other locations. So the other locations are really starting to ramp up higher now as we're starting to see more and more cases coming through. So like I said, if you haven't taken a look at this map and it's something you want to keep track of, it's a good place to find out. And I'll put that into the chat box here so that you can have it for future reference. Moving on, let's take a look. Some of the stocks worth watching. Actually, before we get into that, I want you guys to take a look at interest rates here. This is the 10-year yield on the right-hand side. And those particular symbols are, or I'm sorry, that's the 30-year. Oh, no, I'm sorry, 10-year, my bad. The 30-year is $TYX.X, and that's the 30-year yield. That's something that's worth watching as well. But as you can see, we've had this massive spike lower. 10 years at all-time lows. We're at 0.736% on the 10-year yield. This is a good one to watch over time now, especially with the Fed meddling again in interest rates. As you can see, we've gone quickly from the end of December up at 3.2% on the 10-year, now down to 0.736%. So I imagine many of our money market rates are going to be going back down to nothing again. But we'll have to take a look at that in the future. Let's get into some of the coronavirus symbols that may be affected going forward here. APT, obviously, this one's going to be a wild one. They make protective gear. One of the most recent headlines that we saw yesterday was that China may be considering a 14-day quarantine period for U.S. citizens traveling to China. One of the things that they're citing is our lack of, how do we say it, aggressiveness towards the disease and our kind of passive approach towards it. This may be China just kind of trying to egg us on and push us a little bit, or maybe just warning us a little bit that this disease is quite deadly and can spread quickly. But one of the other things that they discussed in retaliation towards some of the trade deal that we've had with them is that they would stop shipping certain medical supplies to us, which could put a lot of pressure on some of these medical companies, or potentially get some of these companies like Alpha Protec and boost them higher. And obviously, we've seen this one move up and down as cases of coronavirus continue to spread. But Alpha Protec and Lakeland Industries are the two major players in this particular market. On the left side here, we have a weekly chart, or no, I'm sorry, we have a daily chart on the left-hand side and a weekly on the right. And obviously, this chart doesn't really do a whole lot of justice because we've got a very wide range here, especially on the altimeter, where we're looking at between 840 and 2315. So that's a lot of risk to take on. And that's one thing I'd like to warn you guys about when we get into higher volatility situations. Let's see if we take a look at the VIX here. VIX is currently at 48.31, which is incredible considering where we've been and the last time we've spiked. If we look on a weekly here, we can see this might be the highest spike we've had in some time since the beginning of 2018, and obviously sometimes in the past. Let's see if we don't have it all the way back to 08, but if we went back to 08, 09, you'd see some spikes up into the 70s and 80s. But obviously, the VIX is one of those particular strategies that kind of spikes up and then comes back down as volatility subsides. But this is one of these times where you may want to be reducing your position size, play the outsides a little bit, play quick, be nimble. Try not to get too caught up in one particular position and hold it too long, because you can really lose pretty badly. We see the E-mini futures are down about 96.5 right now, indicating around a 2% lower, 2 or 3% lower for market open. Let's see. Let's go back here. Where were we talking about? Oh yeah. Diagnostics, another company to watch for this coronavirus. They're a diagnostics company that's testing for the various different for the strains of coronavirus. NVAX, another one to take a watch at. They're a vaccine company that can hopefully get a vaccine developed for this. Some of the outside players within this coronavirus are obviously the airline industries, cruise lines, and some retail plays. But if we look at American Airlines here, even on a weekly, we're not going to see much. I mean, we're in uncharted territory across the board here, unless you go back all the way to 2013. But not going to be a whole lot of support and resistance areas to take a look at here. We're obviously in some really bad situation for the airlines. However, these particular companies, if we start to see a vaccine come out, or if we see less spread of the virus, these may be companies that you want to try and pick up a small portion of in order to capture on the gains of the virus subsiding. Alaskan Airlines, another problem area, another airline that's having major troubles. JetBlue, they're all going to look about the same. Not great. Southwest, generally more of a regional airline, but less people traveling. Allegiant, the most pure, probably regional travel in the U.S. As you can see, maybe some support here down to 121.96, but these are going to be highly volatile and going to be tough plays to catch. Let's take a look at interest rates. Obviously, we talked about the 10-year, 30-year. Fed had an emergency rate cut of 50 basis points earlier in the week. Expectations are not looking good. Next meeting will be on March 18th. We're showing potentially about a 100% chance of at least another 50 basis point cut. And yesterday it was actually, I think, closer to 30% on the 50 basis point cut, but 100% on a 25 basis point cut. Now we're looking at 100% of a 50 basis point cut here. And because we're currently at 1 to 1.25% on the Fed funds futures rate, or the Fed funds rate. And now we're looking at a 43.8% chance of another 75 basis point cut coming in a week and a half or so. Looking further down in the year, we're looking at almost a 40% chance that will be at 0 to a quarter percentage point on the Fed funds rate, which means that there's going to be a lot more pressure on both short and long-term interest rates. So the question now becomes will the Fed bring us to negative interest rates? This is all hinged on, obviously, the coronavirus and how quickly it spreads to the U.S. and how much damage it does to various companies and their manufacturing and the ability to sell. Now, a lot of our goods come from Asia, so if we're not getting goods, we're not going to be able to sell goods, and therefore that's going to impact our GDP and everything else in our economy. So even though the U.S. is kind of isolated from the event at the moment, most of our goods still come from the Asian region, which could be very difficult for the United States going forward. If we take a look at bonds, again, we are in uncharted territory. We can take a look at the 30-year bond, the at US. You can see we're at basically all-time highs here. I'm not sure if there's anything going back any further. Nope. So we're going to want to be careful with some of these long and short-term bonds, because if we go to negative interest rates, these will continue to fly higher. And one of the big bond kings, Jeffrey Gundlach, he actually came out yesterday and was discussing that he believes interest rates will go to 0, and that they're going to continue to put pressure on yields for both long and short-term bonds. Now, going into the Democratic primary race, I think there was a little bit of a relief rally in the markets based on the fact that Joe Biden has beaten out Bernie Sanders in the Super Tuesday. He leads currently with 595 delegates. Sanders is next in line with 528. They are the only two remaining, as Warren and Bloomberg dropped out earlier in the week. However, next week on March 10th, we'll have several different states. We'll have Michigan, Mississippi, Missouri, North Dakota, and Washington to find out if we're going to continue the Joe Biden hunt or if Bernie Sanders will make a comeback here. Market would definitely like Joe Biden better than Bernie Sanders, but obviously, either the Democratic parties are not, or either the Democratic delegates are not going to be great for markets, but we'll see as that kind of plays out in the future between either Trump and Biden or Trump and Sanders as we go forward. One of the other major headlines yesterday was OPEC. They were calling to reduce oil production by 1.5 million barrels per day for the rest of the year. Now, this is in order to combat any reduction in manufacturing and supply chain. So the problem is, however, let's take a look at oil. The problem is that Russia has been a bit of a holdout in this most recent cut, which has caused a lot more pressure on oil. On the headlines yesterday, we had a slight uptick earlier in the day based on the fact that they thought they were going to cut 1.5 million barrels per day for the rest of the year. However, now that Russia has been kind of holding out here, we may see a lot more pressure on oil. Let's take a look at some of these levels, but currently we're trading at 44.5 per barrel. Now, if we look at the daily here, we can see if we can find any support. Bottom line here is, earlier in 2019, we saw some down here at 44. So we may try and hold this $44 level. However, if prices continue to get lower, I imagine Russia will finally start to come to play here and agree on some of these cuts. Even on the radar here, not much to see. But a little bit of support down here. You can see some of these lower levels back from 2016 in the $43 level. So we may try and consolidate here in this $40 to $45 range before anything happens. But for now, we're in a very low per barrel price and continuing probably lower until OPEC and Russia agree on some terms for cutting production. All right. This morning we had non-farm payrolls. Not sure that they'll really matter, although it was a very, very good number. Expectations were for 165,000 additional payrolls, but we only saw, we were expecting 165,000. We got 273,000, which is quite impressive. And the unemployment rate was at 3.6% previously, and now we're at 3.5%. So very, very good numbers on the unemployment rate. However, going into the summertime, late spring, as this coronavirus spreads, I have a feeling that companies are going to reduce some of their hiring or not want to have people into the office to come do interviews. So be mindful of that in next month's unemployment report, and we'll have to see how that pans out. Inflation next week. We'll have consumer inflation next week, which has been hovering around 2.3% for the past 3-4 months now. As the Fed continues to cut interest rates on Fed funds futures, this is going to be something that they're going to continue to watch. And right now, between the Fed and the coronavirus, these are the two biggest players that we'll need to monitor and how they react over the next month or so. But if inflation is starting to come higher, the Fed's going to be kind of handcuffed, and they're not going to be able to do very much as far as lowering interest rates or pumping in any more stimulus or producing any more non-QE, as they said it in the past. PPI, producer prices are coming out next week. Can't imagine that those are going to be up very high, especially considering the slowdown in manufacturing. And on Friday of next week, we'll have the University of Michigan Consumer Sentiment. Now, this is not normally one that we would typically discuss, but considering what's going on in the world, it'll be interesting to see how Americans are taking this coronavirus and what kind of outlook they have on the future. So watch that one on Friday. Let's go back to some of these stocks here. Costco came out with earnings last night. They came out beating on EPS at $2.10 versus $2.06, but missing on revenues. They were projected to do $38.24 billion, came in at $38 billion even. Might see some pressure down here today on this particular company. However, we at least have some levels that we can take a look at, despite the fact that some of these support levels have been blown through. especially on some of the major indices, which we'll take a look at very soon here. But if we look down here, trading at 311, we'll see how this shakes out in the pre-market. However, on the daily, you'll see we have a lot of support here at the 300 level, and then another line of support at the 295 level. So keep an eye on that one. If we break down below the 295, we'll have at 289, and then again down here at 276. But it's going to be a wild ride. So let's take a look at some of the major market indices. We'll take a look at the S&P, the NASDAQ, and the Dow, kind of see where some of these outside lines might be, as the E-mini S&P is now down 105. So currently at 291 here on the SPY. Let's turn the radar on here on the weekly. But as you can see, we have some strong support at 290 here on the weekly. You'll see we have the unfair low here at 289.26, and then the point of control from the previous box, the cyan color, at 288.03. So watch for those to be potential support areas for a quick bounce. But if you look in the past here, we've seen some of these support areas fail rather miserably, especially this high volume node here at 301, which was tested yesterday and fell through in the overnight session. But obviously here in this 290 to 292 range, we're going to have some support. Now, if that support breaks, we're looking at a 276 to 276.5. So be mindful of that on the SPY as you're trading. And if you want to play the outsides, those may be some of the areas to consider. Looking at the NASDAQ, we're going to have that similar look, although a little bit stronger here on the upside, even looking at the weekly. A lot of support here down at the 195 level on the Qs, currently trading at 203.30 or so. The low from the week was down here at 198.17. So on the daily, we can see some of these levels again here at 202. So if we're trading at 203, we should hopefully see some support here down at 202. But if not, again, watch for this weekly here at 195. And that would correspond with this 193 on the daily, where these high volume nodes are, up to that 195 level. On the Dow, obviously a lot of movement, a lot more volatility in the Dow here, and we're seeing some support on the daily here at 246, currently trading at 252. But a lot of support here in the 245, 252 level. I think it's going to take a lot of an effort to really push lower than here. But obviously don't quote me on that, considering what's going on in the world today. On the small caps, a lot of support here. If you can see this on the small caps, you have this massive consolidation period throughout 2019, which will provide a lot of support to the downside. Let's take a look at Tesla. We had a request to take a look at this one. Tesla has done extremely well over the past year or so, but starting to see some downside here. We have a pretty good consolidation level, upside and downside here, down to $570, currently trading at $685, but also have some upside, a ceiling level here at 766. But we're talking about very, very wide ranges here, and this is why we generally, during high volatility times, reduce our position size in order to combat this volatility, because if you put on the same position size, you're exponentially increasing both your risk and your reward. So be mindful of that. But Tesla's got some interesting levels here at 765 on the upside, 575 on the downside. So within that area, obviously we show a little bit of a support and resistance here on a new altimeter that's formed at 762 and 641. I wonder if there's anything on the weekly here. Yeah, on the weekly, we've seen so much upside in Tesla, that really the only support level is down to 253. So this is going to trade rather quick, upside and downside. Maybe some support here at 350, but I can't imagine that we'll get there. But obviously not a whole lot of volume in this particular area. So this is going to move very, very quick. Taking a look at some of the Hong Kong stocks, another request here of FXI. It's kind of amazing that some of the emerging nations have actually, before we look at FXI, some of the emerging nations have actually held up much better than U.S. companies. You can see here at the high, emerging was at 46 or so, and we're down trading around the $40 level. So about 12 or 13% downside, about the same as what the S&P and NASDAQ was, but you would really expect, especially with some of the emerging nations having a lot more cases of coronavirus, that this would see a lot more downside, but really not seeing it here, which is rather interesting. It kind of goes with the lower valuations that the emerging nations have compared to the U.S. We've gotten into a very, very high valuation level in the United States, whereas the emergings have kind of lagged us for a long, long period of time. But very good consolidation here. I mean, it's wide, down 44, down to 38, but a lot of consolidation, and I believe we're going to probably have a lot of support all the way down to 38 here. This may be a good opportunity for longer-term investors to look at some of the emerging ETFs and emerging mutual funds if you're taking a long-term approach. But going back to FXI, similar kind of look here. These are Hong Kong stocks, currently trading at 40.20. Looks like we have some support in that 40.20 area. However, the ultimate downside here, support would be around the $38 level. Looking at the weekly, you can see, let's draw this box because this is interesting here. Let's turn the spotlight. Can't try to do that. I don't know how to turn the spotlight off. Well, anyway, you can see this massive consolidation here at the top level at 46 all the way down to 38. So that's kind of your box that you're going to want to play in here. Every time it kind of moves up to this $45 level, they sell it off, bring it back down lower. Same thing that happened here toward the end of 2020. We saw a move up to that $46 level and then subsequently back down here. So use these kind of outside areas to try and take on some positions and potentially build them up as it moves back up to that $46 level. Let's see. Anything else that we missed? One thing that Starbucks did come out with yesterday is they're projecting that second quarter sales are going to be down 50% on a year-over-year basis. Obviously, we're going to start to hear a lot of these companies come out with these numbers that are going to sound lucrative, but considering the fear in the market right now, they're quite justified in some of their projections. We see this now trading down at 73 and a quarter. Obviously, on the weekly here, we've got a lot of downside until about the $70 level. This is pretty weak support level, but much more support down in the 60s. Starbucks is really going to suffer. What's really surprising to me that we'll take a look at one last stock before we get out of here is Luckin Coffee. One would think that this company would be under a lot of pressure considering this is one of the major coffee players in China. However, as you can see, really hasn't suffered a whole lot of impact and is currently trading around the $40 level, which is kind of the high side of this consolidation range. This may be an interesting one to take a look at from a short perspective, although it has been strong. But looking at it from a short perspective with a support level down to about 30.5 or so for a bounce higher then. But Been a very interesting chart here on Luckin, and would think that they would have a lot more downside, but this company has remained extremely strong. I think that's all that we have for today, and enjoy the rest of the day, everyone, and good luck trading.